Welcome to the Phoenix Prosperity Podcast, where wealth meets legacy. Join your host, Tim Fergestad, as we explore the journeys of Phoenix's finest to success and beyond.
Hello, this is Tim Fergestad. Thank you for joining us. I'm very pleased to have Chris G with me here today. Christopher is a CFA chart holder and CIO, Chief Investment Officer of RBG Capital. He leads the firm's development and communication of investment strategies and policies, supervises and oversees the investment process, and makes decisions on asset allocation, external investment managers and funds, and risk management across portfolios. He also produces thematic investment ideas for the firm's high and ultra high net worth clients. Welcome to the show, Chris.
Thank you, Tim.
There's a lot there. Did I say that clearly?
It totally works for me. I think that was great. One of the better intros I've had this year.
Why don't you give us a quick snapshot of RBG Capital and what you do there right now?
Certainly. So we're a boutique investment firm and asset manager. We have two sides of our business: investment banking and asset management, where, like you said, we work with high net worth and ultra high net worth individuals. Typically, that lends itself to business owners. Our operating model in a nutshell is our investment bank primarily is the tip of our spear, where we work primarily in sell-side transactions where we represent individuals or shareholders in succession planning and creating an M&A event. And during that process, which is certainly a resource and effort intensive endeavor, we build relations and reflect our capabilities to effectively walk the fine line between the corporate and household balance sheet, typically establishing either the shareholder or founder's family office ahead of close of a transaction, and then post-transaction, we post liquidity from the transaction. We manage the assets afterwards and all of the goals and objectives that the client seeks to pursue and achieve going forward.
Okay. In addition to just business owners and helping them transact and do exits and so forth, I know that we also have family members who are anesthesiologists, other high income people. I know you also have clients in that space as well.
Yes, we work well with professionals. Really, anyone that has a complex, or an increasingly, growing in terms of complexity financial situation. Those are scenarios where we add, an increasing amount of value, for those clients and households. Yeah.
Okay. So in terms of what sets you apart, just to clarify, it's probably the more complicated and things that's where you guys start to really shine.
Certainly. So within, so I'm the CIO of our firm, but within it we have different specialties. Obviously, we touched on investment banking, but then also, financial planning specialist, estate planning, and it's a holistic approach towards somebody's total financial and estate plan, which again comes back to whether it be purely personal or combination of the personal and the corporate, and and that's where we get a team approach going. So you have multiple smart individuals with different focuses, essentially looking to optimize a client or household situation.
Okay. And how long have you been the chief investment officer there?
Coming up on 2.5 years now. I've been with the firm for 14 and began on our investment banking side. So my background's in investment banking and private transactions. And then my academic foundation is very much suited for investment analytics, capital market expectations and assumptions, and just breaking down company operating models and strategies in general. So really enjoying the how fast paced the markets have become.
Sure. Okay. Does that come easy to you? Because I know a lot of people find that challenging.
I don't know if easy is the right word, but I have a lot of fun. So
Okay.
it feels easy from the standpoint of I really enjoy it. I take a lot of enthusiasm going into analytics and everything, which makes you sound like a total nerd, but that's
Nerds rule.
nerds rule. So I take the title proudly, and I spend a lot of my free time even, and so it is an enjoyment for me.
Okay. So what's one of the biggest challenges you've had in to overcome in your career? And maybe that's the transition from the banking side, or is it?
When I took over, what was necessary was just to create a more of an evolution of how we were approaching our capital market assumptions, and the enhanced volatility, which cuts both ways in terms of good and bad for for investors. And so I took an approach to basically turn a lot of our systems and processes upside down. They were working fine, but they were much more traditional. And in this case, took a more different approach with improving our technology, improving our use of third-party databases and research analytics, and it just really shook things up. And it's been it's had tremendous results to the positive.
Okay. Can you speak to the different types of investment classes that you guys offer?
Certainly. Well, it's really all classes, but where we really differentiate is that a couple different things. So from the portfolio standpoint, we're holistic. So we take a total portfolio approach where, oftentimes you have ultra high net worth or high net worth who have maybe more than one advisor or more than one investment account, for example. So we seek to make sure that we are capturing, from a knowledge standpoint, all assets. And we're told we don't try to. If you like having someone else also, that's fine, but we want to make sure that we're doing things that are benefiting, whether it be from a diversification standpoint or also just an exposure standpoint of maybe you are underweight something that you're heavily weighted, and then heavily weighted in other things with another advisor, with another firm. So there's a holistic aspect. Then from a just investment standpoint, we're agnostic. We will basically go wherever we believe best thinking is at the time. And that applies to both public and private investments. So on the private investment side, that could range everything from your alternatives like real estate to private equity, private credit, and direct investments of that type. And then on the public equity side, on the public market side, it's everything under the general umbrella of public securities.
Okay, that's a lot. Are you sort of an expert in certain parts of that portfolio or those offerings, that spectrum, or do you consider yourself pretty well based in all of them?
By design, I have to be more generalist, and I leverage our different relationships with different sponsors and across each different asset class, if you will. So whether it be real estate or credit, there could be multiple companies and investment sponsors that I'll tap into to gain insight of where their views are and everything. And then that's more of a broad data gathering, and then coming to kind of our own assumptions internally through our investment committee.
Okay. If a lot of this is very complicated, right? You're talking about it, right? Like the equities markets. Like that's just one subtle part to what
Sure.
you do. But we could dive into the whole show just talking about that, right?
Oh yeah, I mean, you could take that further, and we could talk about AI and cybersecurity, and those trends that are of a heavy focus. And I don't think you have that much time on the call to.
Well, it's weird that you're in a unique space, as you said, sort of as a generalist. You get to play in all these different spaces, but as you said, you leverage other affiliates and your team members to for the nuances, for individual details. If someone was listening to this right now and they wanted to get a better understanding of the options and the types of services you provide, what do you suggest they do?
We'll have a conversation with anyone. What we're really about is whether or not we can add value. Because if we can't add value, then we're not a good fit. And certainly we have relationships where if we're not a good fit, we can make introductions and go, from what we've heard, because this is what it really comes down to, is everything's about goals and objectives. So what we're very, very, very good at is listening to what clients are seeking from a goals and objectives standpoint. And again, that could be on the corporate, or it could be on the personal, or, and like I said, an intermingling of the two, which is most common, and really breaking that down and helping, a client or even a prospective client better understand what it is they're seeking, and then going from there. We don't view anything as a one size fits all. What is a recommendation for one is not going to be a recommendation for another, because goals and objectives can differ, and those nuances do matter. And so strategies, transaction structures, all of those things are tools in the tool bag. They're not definitive recommendations at any time. They're simply tools that are, leveraged to enhance likelihood of meeting goals and objectives. So, we're very open. We're very firm believers too in the aspect of a rising tide. So we want to connect with other, whether it be business owners or other, even people, firms that would be considered competitors. We think that there's enough opportunity for everybody to provide value, and so we're all about just doing business with and spending time with good people, good business owners, good members of society. That right. I know that sounds a little general, but that's how we operate, and it does make for a nice day to day. It's not like you're just going into a daily grind. There is a daily grind, of course, but it does make things far more enjoyable from that perspective.
Sure. In fact, speaking to having different tools in your tool belt to help people solve problems, that I met you at a real estate meetup here in the Valley, where you guys were presenting one of those options.
Yes,
which I believe was it a 741?
That was the 1031 exchange with a 721 UPREIT.
Okay.
Hat on. Yeah.
Right. So again, for our listeners, I focus on real estate investments, and Chris and his group were there talking about some of the tools they can use to help people mitigate some of the tax implications on some of the transactions. Do you want to just speak to that real quick, Chris?
On the 1031?
Sure. Just some of the options that you guys can help people with.
Oh yeah.
When they're transacting.
Certainly. So when Tim and I met, that was a seminar that my business partner and I were presenting, and that was on a specifically in a real estate exchange, and provides everyone, everyone involved in real estate are somewhat familiar, understands the 1031 exchange. And then what we were sharing was the aspects of that combined with use of a 721 UPREIT, and all of these codes are essentially IRS codes, which allows for essentially enhanced estate planning, for the investor, individual, or whoever looking to take a 1031 exchange a little bit further than simply what I like to say is just kicking a tax can down the road. It does provide for stronger estate planning and options, because ultimately you end up in a real estate investment trust, which then allows for more individualized shares to then be parceled out, at the investor's desire.
Okay, so for our listeners who may not be familiar, so often if you buy property and then you have a lot of profit or gains from it when you sell it, those are taxable, and there are exchanges that the government gives you to incentivize keeping your money in real estate. And one of them is the 1031 exchange. If you do a like-kind exchange, you buy a new property, you can then use the proceeds from that first property sale tax-free into the next one. They keep track of your basis though, and so what you're going to, as Chris said, you kick the tax can down the road. It's true that you still owe the tax on that, except you have more purchasing power, and you can defer those taxes and use that money sooner, and you can do that again and again and again. And one of the one of the strategies of that model is defer, and die, which I'm not sure I like a plan that ends in my demise. But then when you die, you whoever inherits that at that point, it gets a step up in basis, so you can avoid the taxes in that sense. There's all other alternatives, and that's what Chris was saying they can offer, which is great.
Yep, exactly.
Go ahead.
Oh no, I was gonna. But aside from that, we also will do. God, there's so much.
Yeah, there's
so much out of
just one example of the many tools that you guys can bring, like being a diversified shop, which is great.
Mm-hmm. Yeah, I like, for example, actually next week I'm going on for a due diligence trip to visit a couple of data centers, which is another aspect of investment. Obviously, AI and data center infrastructure is just, it is the wave right now, and it's such a, the outlooks as far as spending, capital investments coming in to that space, projections range anywhere from 500 to 700 billion a year into 2030 for expansion of infrastructure to support artificial intelligence and just cloud computing and data center needs. And so, that's something that I'm looking forward to better understanding, because on the real estate front, especially when it comes to real estate investment trusts, the types of leases and the structure of that underwriting is completely different from, more traditional, I'll compare it to, industrial, or certainly far from office
right,
type,
or even apartment locations.
Or exactly
what I do. Yeah, data centers are a whole nother beast because of partly because of the energy demands, right? The utilities in front, and just the enormous costs associated with the whole project.
Yeah, you nailed it. The energy, the enormous capex, the mission critical element. It is whether it be...
What's mission critical element? I don't know what that's referring to.
Well, so if you're a cybersecurity company and you're operating out of a data center, once you've kind of embedded yourself into a data center or multiple data centers, the likelihood that you're going to leave that data center because you can't, or the effort, right, whether it be the capital intensity, the time intensity, or more so the combination of those things, and just opportunity cost, because you can't have a smooth transition, typically where you're going to have another data center you're going to migrate to, and then not have any interruption to your existing customer base and projects, and the likelihood is extremely low. It's not even, immeasurable that that's just not a risk to your business operations. And so, partnering with the right data center is going to be important, especially for small businesses, because larger, your mega cap companies of the world, they're just building their own data centers. They're just putting it, ponying up the tens of billions of dollars to just throw this thing up and and build it out themselves.
Right. I liken it to a little bit to like what I do is in multifamily real estate. It's just way cheaper and easier to build a bigger apartment complex than to build like 12 single family homes.
Yeah, it really is.
If I'm gonna have to do this, I may as well just go big anyway. And that's why, for example, in Arizona and a lot of the places don't build 20, 30, 40 plexes, right?
Mm-hmm.
You don't see those. You see small ones or the big ones. It's just not, it's not cost efficient to do anything in the middle.
Right. And so, yeah, it's an exciting time. It's also a very, very interesting time.
Right. I do know there's a number of them in the valley here being built right now. What's the time frame for those, Chris? Do you know? Is it something like 4 to 5 years?
It really, it really depends on the data center themselves, because you have, as far as the types go, you have the new builds, just the mega builds, which probably take 4 to 5 years. But also depends on, what level of infrastructure is already there. Because like you said,
right,
power element.
If they're close enough to the existing power lines or structure, then yeah, maybe sooner. But
mm-hmm. And then you have other like existing data centers where basically just going in, and it's a question of they already have power, but then it becomes, is it enough power? But at least likely there's a likelihood that there's enough power, at least from the standpoint that could maybe make some upgrades to existing infrastructure to then power that, and then you can just put the capex in to retool that particular data center that's existing. So those tend to be your smaller ones where I don't want to call them repurposed, but it's almost actually it's more akin to retooling, which is kind of a unique element for the real estate markets.
Okay. Speaking of new builds and stuff, is there anything coming up for RBG Capital? Any initiatives or anything in the next 6 months or a year that is exciting?
Very much so. We have an internship program with ASU. Well, actually, we have a lot of ASU and U of A in here. So
okay,
but we have an internship program that's been really positive, and have actually been hiring full time out of that. So
okay,
that's been great. And then right now in the investment front, we are very, very excited about a private equity investment that we've been pursuing, which is focused on secondaries transactions in the market. Anyway, that's a very exciting.
That doesn't sound super sexy to me, but maybe you can explain why that's exciting.
Well, your traditional private equity fund, typically has a life cycle of 7 to 10 years. At least that's their target. 10 years is kind of like where they cap out, because private equity is seeking to buy, build, grow, and then and then sell to typically to a large strategic buyer or another larger private equity fund. And what goes against them is time and the cost of capital. So what they've caught themselves in, with interest rates being where they're at, is rising cost of capital or a higher cost of capital, and markets that don't want to bring down valuations. So here they have a situation where they would love to get out of investments they've been in for 10 plus years. And some have been doing, better than others. It really varies. Well, where the secondaries comes in is, let's say you have an asset that is doing phenomenally and, is believed to have, let's call it 60 to as much as 200% more growth left in it. But you've been holding this asset for 10 plus years. You've seen phenomenal, growth of that asset. So, certainly if you sold right now, they would be doing very well. but
not as well as they could if capital was less.
Well, if you know that you have 60 to 200% left in the tank of an investment, why would you sell one of your winners? And you hold on to your winners. So the secondaries market allows for opportunity for a private equity fund to meet liquidity demands that come from their limited partners, where they've been sitting in a fund for 10 plus years, and then be able to, roll that out of their fund and then hold on to a winner and see more of that growth through before they recognize, and go full cycle on the investment. Okay. So, yeah.
Okay. And so you're setting up a secondaries marketplace?
So this is a specific fund that the sponsor that we're working with is out of England, actually, and their focus is really on the large cap space of secondaries private equity transactions. So the minimum check size they're targeting is $500 million per acquisition, and so it's just a very niche space because of the size of the companies that they're able to acquire, and then the sponsors that they're the other private equity funds that they're essentially cherry picking from. And so the structure of it and everything is what's really intriguing, and it's always good when you have an investment that is if there's an alignment of interest for all parties involved and it's value accretive to everyone involved, then that's just a good deal.
Right. Okay. Thank you for sharing that.
Yeah.
So here's a question I like to ask people, a reflection question. What do you wish you would have known sooner about building wealth and success in your career?
I wish I would have known everything 5 years sooner. I mean,
you're not the first to answer that.
It's, you get older and you realize the value of wisdom. And I think if I were to go back and tell my younger self, I would probably say, you've known, and you've had relations with and still have relations with very experienced, knowledgeable people. And I would have told my younger self, maybe give a little more credence to some of the wisdom and insight that they shared. And, there's plenty of instances where there is advice that I look back and think, well, I was just ignorant and naive for not recognizing the wisdom that was being shared with me. And, I'm fortunate that I can recognize that now and look back and remember it and apply it. But it would have been nice if my younger self had applied that,
right. A lot of it's it's there when you're ready for it, right? And I can reread some good books now and get the next lesson that I missed the first time just because I wasn't ready for it.
True. No, totally agree.
Okay, that's a great point. Good answer. Okay, so Chris, if people would like to connect with you or learn more about RBG Capital, what should they do?
Email is fantastic. cg@rbgcap.com.
Okay,
would be fantastic. Certainly can check out our website, rbgcapital.com. And just always looking forward to meeting new people and building new relationships. So,
okay, excellent. Well, thank you everybody for listening and for watching. Thank you very much, Chris G, for joining me today. We appreciate you sharing your storied insights into success and impact. Thank you,
Tim. Thank you for having me, and thank you, everyone, for listening.
Inspired by our guests? Visit phoenixprosperitypodcast.com/guest and join us on the show and share your success story with Tim. The spotlight awaits.